What's happening in the market for retail loans, for retail products? One by one, RBI has moved against companies in this sphere. Fintech, we have heard of Paytm. Gold loans, IIFL. Loans against shares, JM Financial. And that's not all. We are told that there could be much more. So, is this a reason to be scared? Not quite. And that is what we argue in this edition of On Point. The choice is very clear. What do we want? The companies or our money? Obviously, it's our money. But this is very interesting because all of these actions by the Reserve Bank of India, by the Securities and Exchange Board of India, which controls our capital market, is happening when an election is just round the corner. So it's surprising that the government is also not holding or asking these regulators to go slow if it could, which means that the role of the consumers, the role of comfortable consumers, consumers who can buy and sell in the financial market, has finally taken precedence over everything else. This is the major lesson. For instance, the RBI had moved in before anyone could raise a scare. Well, okay, some people did raise some scare, but not too many. But RBI moved in, and the market regulator SEBI has also moved in, and they have moved in before the risks have exploded in the market. Now, let me just take one moment to tell you what is this risk business all about. Before that, a data point. More and more Indians post-COVID are investing in the financial markets. Now look at this data. What does it show? That household savings in traditional products is coming down. So products like bank deposits, products like small savings, products like gold or real estate, there isn't that much of a rise. So what's happening? There's a rise in credit card loans, massive. There's a rise in retail investors coming to the stock market. The stock market, and we had reason to talk about this in our earlier episodes. But this time, what we are saying is that in the stock market, there's a massive infusion of funds from retail investors. Now, when the retail investors are coming in, markets are rising, the markets are scaling new heights every day. It makes sense that if a froth is building up, the regulators should move in. And in this case, RBI has moved in much ahead. What is the implication? The implication is that the RBI, the Securities and Exchange Board of India, SEBI, are able to see something which the retail investors or even others have not been able to see. That is what I call proactive management of the economy, of the market. This is what the regulators are supposed to be here for. So kudos to them. And this is what we had also talked about in one of our earlier episodes, where we had talked about what continuity of tenure at the top has done for SEBI. The current incumbent Madhavi Puri Buch, or in RBI Mr. Shaktikant Das, who's had a 6-year term. These have helped. These have helped to bring stability into the market. These have helped to bring in confidence. But let's get on with the retail story. So, in the market for the retail money, even if there's a lot, there is larger competition. You know, it's a competition that happens among the home delivery guys. Before you can even bat an eyelid, these guys are there with the products. You order anything, I mean any household stuff, and things are promptly at your doorstep. How does it happen? Because there are several of them offering to bring in products faster and faster. 10 minutes, 5 minutes. I mean, it's almost becoming instantaneous. You almost feel as if they're standing downstairs and bringing the products up to you. I get that feel. The same thing is happening in the financial sector. What's happening? Well, we can see that regularly, if I am paying my loan on time, like for instance, if I am paying my car loan on time, and it happened to me, I found calls coming along saying that, sir, could we monetize? They didn't use the word monetize, but the way it says, sir, against your loan, could we offer you a fresh loan? Or in the insurance market, if I am a regular payer of insurance, I have not been making claims, then there are companies willing to take on my insurance and offer me a better deal. Now, these are what is called the competition among the companies to get more of the purse of the consumer. Because today, you are the king, and everyone is finding out ways to please the king.
मेहरबान कदरदान साहिबान, ये है IIFL फाइनेंस का गोल्ड लोन मेरा मेरी जान.
So to put it simply, what has happened? Well, what has happened is that the Reserve Bank and the SEBI have said that if you want to offer these products, I want to see that your books are clear. For instance, I want to be sure that the money that you are raising, the loans, the money that you're raising from people as deposits of any sort, whatever the name, you have kept a firewall in the sense that you do not use that money to pay for other financial products or other products that you might be launching from a related company. It's easy to do. Remember, Sahara had once done it. What Sahara did was it raised money from the people. I mean, it gave fancy names, but essentially they were raising the money from the people, and with that money they launched several products. Airlines, retail, real estate, there were stadiums that was being opened, all sorts of things. And obviously, SEBI got after them, saying that you just can't do it. So today, it's not that these companies have done anything wrong, but RBI says they have come close to doing something which is not what the RBI wants them to be doing.
While the Reserve Bank has barred JM Financial from financing against shares and debentures with immediate effect, this will include sanctioning and disbursing loans against IPO shares.
Paytm Payments Bank came under RBI scanner. By now, you must have seen enough videos and read enough stories on RBI's restrictions on Paytm Payments Bank.
Similarly, last week, SEBI moved in. SEBI said that if investors, and that's again retail, people like you and me, are investing in small cap and mid cap funds, then the mutual funds which raise those money have to put in an investor protection framework. In other words, they got to be more careful putting investor money into small cap and mid cap funds. This is very interesting. Why? Because typically small investors know only about the big companies, the HDFCs, the Tata Motors, the companies like SBI, ONGC. These are big companies about which investors know, and investors expect that when they are investing in mutual funds, in the equity funds, the money will go there. But what has happened is that there is a lot of investment or good returns coming in from small cap and mid cap, with essentially companies which are just coming into the market very new but are offering very handsome returns. SEBI says if mutual funds want to invest there, they got to tell the investors how much is going there. There has got to be a investor protection framework. Very wise words. Remember, in 2000, during the UTI scam, there was a huge problem that was discovered, that investors had taken money from banks to put in equity markets. The Global Trust Bank case, the Bank of Punjab case, these were very famous cases which actually created problems and led to a massive meltdown in the economy. RBI has told NBFCs that be very careful that your loans that you're giving away do not end up in sort of controlled equity market exposure. Long years ago, our young listeners may not have known about it, but in 2008-9 there was a case of Satyam. Satyam was an IT company, and Satyam's funds, the promoters of that time, the Ramalingaraju family, what they tried to do was siphon off funds from there to an associate real estate company which they had named Metas. And once those details came out, the market really got badly hit. Now, so what I'm saying is that it's not unusual and it's not the first time that you find promoters often trying to siphon off funds. So, essentially, this is not the first time, but yes, this is the first time when the regulators have moved in ahead of a meltdown happening in the market. That's a very big change. That's a very important change that gives us confidence as consumers. Remember, it's because not just Singh is king, all of us are king, and the consumer's interest therefore becomes dominant in this market story. Thank you from this edition of On Point. For a detailed description of what we discussed here, please visit my Substack. The link is in the description below. Thank you.